Hey everybody, good morning. It's Pete. Welcome to today's episode of Stocks for Breakfast. Today is April 20th, 2020. Got some earnings coming out this week. IBM today, after hours. Probably one of the bigger ones that everybody's going to pay attention to is tomorrow, which is Netflix. Obviously, Netflix, a big stock in play right now. Last week, we were all over it. Hopefully, you got some of that. So a little bit of profit taking. It finally broke that resistance level and just exploded for 3 consecutive days in a row. Unbelievably good, well-planned swing trade that we were all over for probably a couple of weeks. Watch it, watch it, watch it if it gets above this level. And again, emphasizing the need to have a tracking journal, which is different from your trading journal. Obviously, a trading journal is what you did during the day, and you want to pay attention to how you reacted, what your thought process was, so that you can constantly improve every day. Remember, the goal is tomorrow being better than you are today, right? But the tracking journal is trades that you can't afford to miss. That's a big thing. Having a tracking journal allows you to never miss an opportunity, even if it's not triggering right now. That's a big deal. We talk about it quite a bit, especially in the coaching, where somebody will put on a trade, the trade might not make money, or maybe it doesn't make what they expected to in a certain amount of time, and then they'll abandon the stock for whatever reason. That's unforgivable. Quite honestly, it's unforgivable. If you did all the work where you actually believe it was a good idea to put your money in harm's way by taking risk and by accepting risk, actually, I'm going to talk about that for a second. Don't give up on the stock. We talk about it often. There's a difference between a stock, a trade getting stopped out, and whether or not that trade is still a good idea. You must immediately assess whether or not that trade is still valid, and you might have just got taken out. You might have just had a print go down, take you out, or maybe you got stopped out for valid reason. Maybe it actually did trade down there. But as soon as you get stopped out of a trade, it doesn't matter if it's a day trade or a swing trade, it's imperative that you get back in that chart and say, if it gets to a certain price again, what would validate a good entry? Whether it's a short sale or buying the stock, it doesn't make a difference. You need to right away put that in your tracking journal. You need to right away get into your software and set an alert. Or if the order flow is super obvious and it's not that far extended from a momentum perspective, especially on the daily chart, because those swings are a little bit wider, you could put a 100 share order out there, or an odd lot, a 50 share order, so it gets lit up, puts into your stock watch, and you get into the trade again. So it's very important. Now, one thing I hear all the time is, oh my gosh, I don't have time to write a tracking journal during the day. I don't have time to set alerts. This is what you do. This is what you do. If you're trading, you better make the time. There's no other way to put it. I laugh when I have traders who come to me and like, I want to approve, show me what I need to do next. And the first thing I talk about is their trading journal, not the tracking journal, the trading journal. And they say they don't have time to do it. If you don't have time to track your results and your thought process heading into and after trades, you don't have time to make money. There's really no other way to put it. Don't even have a trading account if you're telling me you don't have time to improve your business. That's like opening a business and not paying attention to the books. That's like opening a business and just writing checks left and right and having no idea where those checks are going, or giving blank checks to the market. It's imperative you have a trading journal. And actually, you know what? I did some really solid 3-part video series that I'll post the links to underneath today's video, where it talks about what you should journal before the market opens, during the market, and after the market to immediately amplify your trading success. So I'll actually post those links below. There's actually one page on the website. It's called Stock Trading for Beginners. Huge free resource. You go there and you click on the one that says Trading Journal. But anyway, I want to get a little bit into the price action from the end of last week and into what we anticipate this week. Because a lot more, larger cap companies are starting to report earnings this week, as I just mentioned 2 of them today. You have to put a little bit more focus on earnings and how that's going to affect what's going on in the market. We kind of had this massive rally off the March lows and not so much affected by the heart of earnings season. But in my analysis, I'm not going to say my opinion, in my analysis now heading up to where we are, I never use the term overbought, because you have to pay attention. It could just keep going in that direction, right? But we do have some obvious resistance on the chart of the SPY ETF heading into this week. And the close on Friday was very deceiving, as we discussed. And we were basically trading at the lows as of, I think, 2:40 in the afternoon, about just under 90 minutes before the market closed. And then we had this massive rally into the close, which made all the charts super green, for lack of a better way of putting it, which was very was not indicative. I was trying not to use a double negative there. Not indicative of how the market was actually trading on Friday, which was below the opening price the entire day. So that's what we want to talk about today. We want to talk about the fact that I believe that today we are finally going to end up seeing a bearish U-turn, if not well offered on the weekly charts, for all of those reasons I just gave. That I believe that earnings season and the reality of what's going on under the hood, which I spent a lot of time on this weekend talking about what's going on under the hood, where you're seeing a lot of small cap stocks are not keeping up with the rest of the market. The financials, which we'll take a look at the heat map in a second, getting crushed. There's no other way to put it. JP Morgan had a rally on Friday, but I think it was a little bit more of releasing the selling pressure than it was actually buying. We'll know today. Some of the technology stocks, for obvious reasons, a sector where you can continue to look to the long side, just specifically because everybody is trading from home right now. Trading from home. Everybody's working from home right now, and all of these technology companies, for good reason, are seeing a massive subscriber growth. Obviously, Netflix is not a work from home, but certainly what a lot of people, including myself, are doing after hours. By the way, if you haven't watched Ozark on Netflix, it's pretty intense. Pretty intense. We started picking up on it about 2 weeks ago, and we actually finished it. If you have some downtime and you're looking for something good, I'd recommend Ozark. Not for the faint of heart. I'll give you a little PG warning there. So anyway, I want to touch briefly, without making it sound too confusing too, I want to talk about earnings and interpreting earnings without making your eyes gloss over. Just a very simple, basic thing to listen to and read when you start to read the earnings statements. And so much, not so much reading the income statements and all that kind of stuff, but paying attention to the language. There's two parts to when they always report earnings. There's the earnings they did, which is the earnings per share. Those are the reported earnings for whatever quarter they're reporting. And then there's guidance. Guidance is what you're paying for. Earnings that they did and that they reported, their earnings per share and all that kind of stuff, the revenue, that's what they did. People who own that stock back there paid for that. Now, if you're buying here based on earnings, you're buying what's going forward. So if you're trading now, which you know that hopefully you know by now, what I watch is the order flow between earnings seasons. That usually gives you a solid idea of how to read the tape in that stock. Is when it reports earnings, what's the order flow after that earnings? That's the general consensus leading up to the next earnings report. So again, the smart money is the market telling us what to do. Pay attention to guidance, because guidance is what we're going to be trading over the next 3 months. And we're going to get into the charts a little bit now. We're going to take a look at the heat map to look at some pockets of opportunity and the real story, what's going on in the market over the last 5 days. And that's going to set us up. So just to be clear, heading into this week, we have resistance ahead just above on the chart. We'll take a look at that. We have some reality of earnings season kicking in. We have oil getting kicked in the teeth again. We're going to touch on that in a second. And then we're also going to take a look at a few stocks. LULU, just so you have an idea, LULU is going to be one of the stocks that's going to be in my tracking journal this week, which is a stock that's coming up to resistance, has had a really good, solid 10-day run. Coming up to resistance now. I'm looking for it to pause before it has its next move to the upside. So let's actually take a look at the screen. We're going to start out with looking at the heat map. So this is the last 5 days of the S&P 500. And you can see here this area of financial just getting slapped around. We are going to take a look at PayPal here over the last 5 days just to give us an image of why that's green. So some of these other stocks, we've been all over them. Microsoft, we haven't really talked about Facebook that much. It's kind of trading in a range. Adobe, Broadcom, we definitely keep an eye on that one. Apple's been a little bit weird, where it's been exploding and pausing, has not been giving us really some clean swing trades. But over here, again, obviously the healthcare stocks, especially ABT and UNH earnings last week. So you get an idea of the opportunity. But this is the part that scares me right now about the overall health of the market when these financial institutions need to recover. I mean, there's no other way to put it. It's very hard for the market to have a significant rally when the people who are in the business of money are hurting. There's really no other way to put it. So getting into the news just a little bit, crude oil plummets, just to give you some numbers without making it that complicated. Demand for oil has been reduced by 30% during the pandemic, but OPEC only cut production by 10%. So there's still a 20% difference there, which should represent another move to the downside. Whether or not this is that 20%, which, you know, kind of that number actually matches perfectly there, well, it remains to be seen. So as far as getting into trading, this is the rally that I discussed at the end of the day. This is the futures. We can take a look and see how it was actually more dramatic in the NASDAQ on Friday. But this is where we closed Friday, and you can see where we're trading right now, which is roughly 6:30 in the morning, about 3 hours before the market opens. So we're back down to the lows that we were at on Friday. So my point is, despite the gap higher, we were trading negatively the entire day, and we're kind of like hitting that level again. So the close to make a big green candle in a lot of stocks was deceiving. That's real, and I'm not saying deceiving in a non-legal way. I'm just saying deceiving from a technical, if you only looked at the charts. So anyway, that's where we are now. What I want to discuss quickly is the chart of LULU that I just mentioned. Here's the price action. So basically, you know, we basically judge our profit-taking areas or our profit-taking levels based on what the stock normally did previously. So you could basically say we went from 180 to 225. So a $45 rally here into resistance. We might get one more positive day here. I don't know. It's not really trading that negatively, but a huge 8% day on Friday. Looking for a pause up in the 230 level. So we have roughly, depending on where it opens, about $5 more profit potential if you happen to be swing trading LULU here. Looking for a pause and then ultimately looking for a push up to the 260 level. JP Morgan is one I want to talk about. This is one of those stocks. It actually did have bad earnings. Guidance going forward got hit. Well offered 1, 2, 3. Now I want to talk about, this is an inside candle. Despite the fact that it had lower highs, it's an inside candle. This second candle here, the second red candle, is actually where it went well offered because that's lower lows, lower highs. So well offered, well offered, well offered. 3 days of well offered, and then I guess you would kind of call a relief rally, so to speak. I'm actually looking for this stock to actually trade lower again this week. The guidance was not good. You can see that there's limited profit potential, but it has been making for a pretty good stock if you happen to be day trading. A better sell short would be through this level. Now, again, that's still $20. You do have some room there. What I don't like is the fact from a tape reading perspective, it's kind of in the middle of this trading range. So not ideal. It's not a momentum pullback looking for a pushback. The best momentum trades are when order flow is obvious, 3 to 4 or 5 days of momentum, you close on the highs and then you're shorting after that new high exhausts itself. We're kind of not seeing there. And actually that's what I call saturation plays. So I just want to go through some of the stocks that we were looking at last week on the weekly charts. So you can see here, Tesla. I'm constantly getting barraged about questions about Tesla. Inside candlestick, 2 weeks of solid well bid, and the weekly chart just exploded. I'm not long Tesla right now, so I just want to be clear. But for those of you that are, if we were trading together, I'd be looking to scale my profits up in Tesla. This is a really, really big move. We recaptured most of what the market lost during the recent pullback. I'd be trailing my stop. Not necessarily getting out, but I'd be trailing it. JP Morgan, we just discussed. Goldman Sachs, inside candle of the week, but also did not have great earnings either. So we actually went inside. What we're probably going to end up seeing is a fail here and then looking for it to roll over, which would actually put it into another inside week. So the better trade, if it bounces, would be above the prior 2 weeks. But I think the market's going to be pulling back this week for all the reasons I gave. So we're actually going to be looking for those two stocks to go well offered this week. Okay. Target actually was pretty strong last week. You could actually see that really, really solid, well bid. If we can get above and pause, again, very similar to what we're looking at LULU this week, I'm going to be looking for a run at 130. By the way, a lot of supermarkets, I don't know where you guys live, but supermarkets look like they're going to actually be doing curbside pickup only now, which is pretty interesting. The reason I brought up Square, we talked about that on the heat map over here. in addition to PayPal. Inside candlesticks with plenty of room to go. So 82.50 is the next level, roughly $20 out of the inside week this week. And PayPal actually was well bid with kind of the same profit potential. So I'm looking for both of those. But the interesting thing about Square is that it's easier to manage risk on that inside candlestick, and it's easier to determine whether or not you want to be in, because if it breaks out of that, you're long. If you're not, you just let it go. Microsoft has been obviously a stock to be trading. We are looking at 1, 2, 3 well bid weeks in a row. Not a lot of profit potential. They're roughly $6. And again, if you've been watching the lessons for a long time, I don't necessarily just blindly use the high or the low based on the wick. And the reason for that, I'll just give you a brief explanation. That could be a 100-share print that traded all the way up there. It could be hardly any shares that traded all the way up there. I generally look to see what is the actual price that price is having a hard time with. And in this case here, you can see it stopped there, closed there, opened there. And this is the price. Looks like it's right around 185. So you have roughly $7. Maybe one more positive day in Microsoft. So a lower opening looking for buying if it stays above the open, looking for that 185 level. Newmont also strong last week. The key here, though, is, again, well bid, inside candlestick, well bid, well bid. But we closed off the highs this week. And look at this rally, 32 to 61. That's a real 33 to 61. Stock's basically doubled in the last 4 weeks. That's a lot of price action in a very short period of time. Again, if I was swing trading long, we can take a quick look at the daily charts. Not as clean on the daily charts, but we did have a nice clean breakout here at 50. And a pretty decent pause here, actually, but well offered. That's the point I wanted to bring up. So this is why we watch both particular time frames, daily and weekly. Starting out with the weekly, a really clean pause. I don't like to use bear flag or bull flag. It's just like momentum, pause, push and pause, push and pause. Let's not go crazy trying to find the perfect pattern, because quite frankly, they're hard to find these days. And when I mean these days, I mean the last 10 years. It's very difficult. It's not as smooth as a perfect flag, those kind of things. So I like the language of pause, push and a pause. So this pause actually looks pretty clean. Let's actually go to the volume. So heavier volume on the pause compared to this push to the upside. Look, I'll be honest with you, my tape reading right now, I like the pause. I don't like the profit potential, and I don't like the fact that we closed off the highs for the week. I am moving up my trailing stop. My long was here at this $50 level. Closing, it's opening a little bit lower. I'm moving up my my trailing stop on this one aggressively. Let's put it that way. Next, we're going to take a look at ATVI and EA. Both had significant breakouts. I actually like these as long as they stay above the breakout level. Netflix obviously has earnings tomorrow. Better chart to look at in the Netflix is the daily chart. Here's the breakout that we talked about. Wrote it up, exploded with volume, very similar to what Amazon did. We called for profit taking, got the profit taking on Friday. Now we have what is called a swing high. So it's going to be interesting. If you're trading Netflix today from a day trading perspective, I'd be looking for, is it above yesterday's Friday's close? Is it above today's open? If you get those two scenarios, you could dip your toes in the water looking for a retest of the highs again. If it's below both of those, you're trading on a micro time frame, which is nothing more than the two well-offered candles, and will be a little bit difficult. Amazon, same exact scenario where we called for the profit taking, although Amazon did not close above below the open the way Netflix did. So earnings, we have IBM today after hours. We have Netflix tomorrow, which is obviously a big one. So that's another one. You got to determine if you want to trade Netflix into earnings. Stocks can get a little squirrely heading into earnings. So the game plan for the week, be disciplined with the tracking journal. I'll post a link below for a trading journal video series that I did. And also know which earnings you have coming out. Very important to trade or determine if you even want to trade around earnings. So I'll give you an example of making part of your trading plan when you want to trade and don't. I don't trade around FOMC announcements. So heading into the FOMC announcement, the day of an interest rate announcement, I stop trading around 11 o'clock, and I'm usually done for the day. More often than not, it just becomes an absolute mess in the afternoon, and then I pick it up again the next day. That's just the way I trade. That's over 20 years of dealing with those announcements. I feel like that they are unpredictable price action. That's me. I'm not saying it's perfect, but My point is you need to have some rules like that to determine if and when you want to trade around certain announcements. So you have earnings coming out now. Do you want to trade into earnings? Do you want to trade options at all into earnings? Because they get all over the place as well. A lot of people like to trade options because they feel like, well, I know my downside just if I buy a put or a call. That might be true, but you have to take into consideration the cost of that put and call, because there's pretty smart people on the other side of those options trades who price the premiums where they should be based on the volatility. And there's a lot of people that say that you can actually determine the size of the move based on the premium itself. A whole other scenario, right? And then again, if you want to trade when the earnings come out, after hours or pre-market, depending on which stocks you're trading, also a very big professional day trading thing to do. I did it back in the day. I don't do that either. I like things to be in control. And if you've ever watched it after hours, especially after you just traded a full day, it whips in both directions before it falls, because everybody's reading what I just said. They're reading the earnings per share. They're reading the guidance, and everything's going back and forth. Computers are going back and forth, and then ultimately it picks a direction. So why get caught up in all of this? Just let it settle down. And as we used that Jim Rogers quote last week: "Go in the corner and wait for the money. Go pick up the money that's sitting in the corner." That's generally the way we trade, or like what I like to do, and the thought process that I have. I like it to be easier. I do have a lot of gray hair now, but it's not from trading. So anyway, let's have an awesome week. We're probably going to have to face the question this week: if our bullish stocks reverse, what do we do? You got to make some decisions if you want to short sell those stocks on micro timeframes. And obviously, the better situation is to look for stocks on that heat map that I just showed you that were already on the selling side for the week. Those are probably the right trades to be trading on the short side because they're already weak. Remember, don't short sell strong stocks and think those are A+ trades. They're not. They might be a trade that makes sense on a micro time frame from a one day to the next and an intraday perspective, but just remember you're fighting the stronger move, which is that the bigger order flow over time. So we got a lot to do this week. This is going to be a busy week as far as making decisions, but here's the thing: it's going to be an awesome tape reading week. We're going to have a lot to look at as far as this is long, this is short, here's where it changes, that kind of stuff. So a lot going on. Thank you so much for watching Stocks for Breakfast with me today. It is Monday, April 20th, 2020. If you like the videos, please click down to subscribe. You'll get alerts. Please be safe. Please be disciplined. Have an awesome day, everybody.